The article reports that, quote unquote, um, around 4.8 million Saudis and 461,000 expatriates took bank loans or financed purchases in 2007, according to a recent financial study. The reason, according to one financial analyst, loans are simply easy to acquire. He says, quote, an employee can now get a loan just on the strength of his monthly salary, serving as the only collateral, said Nabil Al-Mubarak, a financial analyst. It noted that the number of business loans, which are used to generate short-term liquidity for entrepreneurs to develop their businesses, was on the decline in relation to other forms of lending. Al-Mubarak said 86% of loans are in the form of consumer debt, led by financing for large domestic purchases. The main purpose, he said, of getting loans was to acquire new cars, houses, and furniture, or to invest in the stock market, said Al-Mubarak. So we can see that this is their understanding and concept of Sharia-compliant credit cards for consumption, very far away from the type of physical production that we would think would be the focus of a growing economy as wealthy as Saudi Arabia's. And so the production of an Islamic economy is sacrificed in place of this concept of imitation of Western consumers. And another indicator is that this is basically a complete imitation of those adulterated prohibitions discussed with regard to the Jews and Christians from earlier, because when we analyze how these Sharia-compliant credit cards operate, the real tragedy is that not only do they use the similar games of the triple contract or the contractus trinitarius, but they use a game that basically makes the credit card, Sharia-compliant credit card, 10% more expensive than the conventional finance product. And so basically, because you think that it's halal, you're paying a premium for it being Sharia compliant. And so these are the types of things that we're going to discuss. These are the types of things that we're going to really, get into to highlight how absurd this situation is. So we also have to admit that this struggle is not new. The great Hanbali jurist Ibn Taymiyyah, rahimahullah ta'ala, who many of us love, in his work that comments on the Medinan way, pointing to the correctness in the practices of the Salaf from Medina as a proof in the Maliki Madhab, commented in that work on the necessity of understanding the essence of an issue after relating stories about how people used to attribute the markup of interest to the sale of a loaf of bread or to a handkerchief or some menial item. So they would sell like a handkerchief for 30 dirham or 30 dinar, and that would be the interest, but they would say that this was trade. So there was certainly evident examples of these manipulations from the early days of Islam. So the tricks they use, Ibn Taymiyyah says, allow anyone who desires to practice usury or riba to do so. It is known that if the Messenger sallallahu alaihi wasallam made something unlawful, then that thing contains fasad or corruption, and to permit it to be done by any means whatsoever has no benefit in it. So to do this is a fault and stupidity. The corruption is still there, but it has increased by their cheating. And if that involves inconvenience to themselves, they have to put themselves out and gain no benefit at all. And what does such a person think of the Messenger sallallahu alaihi wasallam? Indeed, it is known that if a king was to forbid something which the Prophet forbade, and then the person who was forbidden that thing then used a trick to which was not forbidden in this sort of way, they would have considered him a cheater who is mocking their commands. And then he quotes the examples from, for example, in the Quran, where the people of Bani Israel were catching fish on the Sabbath but not taking them up in the net, and the people came to warn them and were rescued, and the others that violated the Sharia and manipulated it were turned into apes and swine. And so we will see as this course unfolds the manipulation and trickery associated with the contemporary practices in this field. There's very little effort even to hide it as you read through the text. To take one example, quote-unquote, Mufti Taqiyuddin Uthmani, or Usmani, reports in his book Introduction to Islamic Sharia-compliant Finance that, quote, the instruments of leasing and murabaha, he's talking about ijara and murabaha transactions, are sometimes criticized on the ground that their net result is often the same as the net result of an interest-based borrowing. This criticism is justified to some extent, and that is why the Sharia supervisory boards are unanimous on the point that they are not ideal modes of financing, and they should be used only in cases of need with full observation of the conditions prescribed by the Sharia. So it sounds rational. The Sharia-compliant boards are unanimous that murabaha should not be used. What he doesn't say in the report is that from the beginning of the industry, and increasingly so today, that the majority of contracts and assets held in the Sharia-compliant finance sector are conducted using the same leasing or murabaha transactions he's referencing, and that they represent over 80% of total transactions within the industry. So it's very imperative that we highlight this and head in a direction where minimally we have actual efforts to fulfill what Taqi-ud-Din Uthmani is presenting here as the recommendations of Sharia supervisory boards. So we have to phase these products out, and what we see unfolding is an actually going more in the direction of these unrecommended but tolerated due to necessity products, and that means that the Sharia-compliant finance industry has taken a turn towards self-destruction, essentially. So that takes me to the final point that I want to make with regard to our brief background discussion. Behind these realities within the industry, usually justified on the grounds that we simply do not have enough power, wealth, or ability to alter course. So the claim is that we're weak, and there's all sorts of ways that people, make this up. For example, it's permissible to give zakat to someone who's angry because the Prophet ﷺ gave zakat to Abu Sufyan and to make him inclined towards Islam, and they use all of these very inapplicable and wild, absurd arguments for why we have to tolerate these non-Sharia compliant products temporarily while we attain more power, and but of course that never really happens, and we never go in that direction, and that's what we're going to talk about as the course unfolds, understanding why that's the case and why it will not alter course unless we alter course. So while they argue that we don't have power, wealth, or the ability to go in a different direction, that this exists within a fundamental background that is very, very akin to typical arguments that are associated with those that serve imperialists or colonialist masters, and essentially hints as a shadow reality of a cause of foreign control and dictation, and we'll try to surf that out and point out where that foreign control comes from and what's its intention. So looking at the next slide is imperative if we're going to understand that transformation in this industry must be holistic, meaning comprehensive, and think about much more than the reductionist view of Sharia-compliant finance as an isolated phenomenon influenced by other external factors. This one will probably hit home and make it very easy to understand. So what you see here is you have a slide. We have discussed, certainly now, we've covered the importance of physical production in the real Islamic economic system and some of the realities about institutional comparisons. But now let's look at the underlying reality of the physical economy within the Muslim world. You see that this diagram portrays a flow of dollars from the rest of the world, 3 primary points: China, Europe, and the United States. And we do mean dollars because a fact of the international order is that as of the early 1970s, with the founding of OPEC, the only currency that can be used to purchase oil from OPEC nations is dollar bills. And so what we have is the foundation of what we call in the literature as the petrodollar recycling program. And we mention it here today in the initial discussion, even though we're going to return to it and talk about it in detail later, primarily because understanding the potential we have to make sudden and drastic alterations to refute the notion that we are powerless, incapable, and must be gradual in implementing alterations is largely a farce when we look at reality. A 2006 paper from the IMF before the crash defines petrodollar recycling by saying that the term, quote, refers to the reflows to the rest of the world that result from the use oil exporting countries make of their oil receipts. A portion may be spent to purchase foreign goods and services, and another saved in foreign assets held abroad. Such foreign assets may range from deposits held in foreign banks to bonds and private equity, unquote. However, it claims as well, if you read through it, that, quote, one way or another, all of the foreign exchange that flows to oil exporters as a result of an increase in oil exports flows back or is recycled to the rest of the world. It is useful to distinguish the two channels, blasé, 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 blasé. So it claims that all of the money that comes into petro-states or oil exporting states actually goes back to the rest of the world. So this course is going to cover the actual history of this affair, the mechanisms of its control, its consequences on keeping an industry that could easily grow to the tens of millions almost overnight in the shadow of banking circles, with regard to comparing it, as we did earlier, to HSBC, Citigroup, Goldman Sachs, etc., or the national economies of the Northern Hemisphere and developed world. So another report from the New York Federal Reserve in 2006, again before the financial crisis set in, when oil prices were starting to rise to above $85, $90 a barrel, and they are getting back into the $100 a barrel realm now, reported, quote, our analysis indicates that most petrodollar investments are finding their way to the United States, indirectly if not directly. In particular, the increase in net financial inflows to the United States since 2002 has roughly matched the increase in net outflows from oil exporters. That's a miracle. This relationship suggests that petrodollar purchases of non-U.S. assets have been generating roughly offsetting flows from the financial markets where they were originally invested to U.S. financial markets. And then this interesting report, which is not part of the reading curriculum, but I can forward to anyone who wants, published by the New York Fed report, also highlights, quote, unfortunately, efforts to study this topic are complicated by the fact that the U.S. data just happened to not track the original source of funds entering the country. For example, oil export revenues might be deposited in a London bank. The depositor could then ask the bank to buy a U.S. bond or U.S. equity to be held for its custodial account. The data would show the financial inflow as coming from the United Kingdom, not from the oil exporter. So you can see very clearly that with regard to this discussion, and you look at the map, you see some fundamentally obvious indications. What we have on our hands is dollars for resources. The oil goes back to countries that are developing, but so does the money that they are in fact paying for it. And what a deal that is indeed. And the reason that we've highlighted this phenomenon here, although briefly, is because it lurks in the background of our entire discussion. It is in fact one of the pillars that if it does not change, then there is no hope that we can ever establish an Islamic economic reality. That's a fact. If we do not, as Muslims, make efforts to alter this reality, then the resource base by which we could develop the productive economy will not change. And I use a famous quote to explain this from a theorist of international relations. Forgive me for the secular references, but I was trained in non-Islamic schools. So E.H. Carr observes, quote, war lurks in the background of international politics, just as revolution lurks in the background of domestic politics. So when we study the wealth of the Ummah, we have to look beyond simple explanations that reduce the picture. We have to look in the background. We must realize that the decisions on where and how to invest the vast wealth of the Ummah by authoritarian regimes, armed and propped up by foreign powers, is not domestic. That lurking in the background is indeed the threat of war and occupation. For example, the notion that if we were to alter that system of petrodollar recycling, we would not be invaded is a complete fallacy, and anybody that participates in this course will read a book on the petrodollar affairs published making the argument that in fact the Iraqi regime was invaded. One of the primary reasons that Iraq was invaded was because Saddam Hussein began to accept euros for oil, not just dollar bills, or in fact demanded euro for oil. And that was a part of the rise in the euro that coincided with the late 1990s and early 2000s. But that's another part of our discussion.